All right, I think I might be the only one on. Oh, nope, there we go. We have quite a bit of people on now. Great. All right, we got, let's see, 22 people. Sweet, guys. Well, I'm going to take just a few minutes to let people roll in, and then we'll get started. I'm very excited about this live session today. I have a lot in store for you all. Got a lot of people joining. Let's go. Let's go. Drop in the comments where you guys are from. I'm intrigued to know. I'm going to play some music in the background. If you guys like Khalid, it's my new favorite song now. I even put this song on to me. Indianapolis, let's go. Brazil, nice. Kenya, Indonesia, Poland, Brooklyn, South Africa, UK, Jersey City, Germany. Awesome. Cameroon, Uganda. South Africa, love it. Morocco. Got a lot of South Africa in the building. Love it. My business partner, Charlie, is from South Africa. He's in Pretoria. I feel very sorry for you all going through this load shedding in South Africa. That is awful. Yeah, I have some music playing in the background. I can stop in a minute. Nambia. Mars. Mexico, let's go. All right, I'm going to give it like 3 more minutes, and then we'll get going. Just want to make sure we get as many people on as possible. We have so much to go over, guys. So take some really good notes. Bangladesh, awesome. Germany, Canada. I actually did lie. I said 20 pairs. I actually have 21. So we're going to do the first half. So we're going to do 11 pairs the first hour. We're going to take some questions. We're going to have a little bit of an intermission, and then we're going to finish off with the latter half of the pairs I have. Hopefully that'll cover everything. The pairs that I don't go over today, unfortunately, I won't go over the ones that I don't go over, obviously, because I don't see anything on those pairs, and it would be a waste of time for me to do so.
And it will be posted to the recording later, right?
Yes. It should automatically post, yes.
Sorry, I'm a couple minutes late. Just got back from church, still in the clothes.
It's just gas song, bro. Khalid.
Yeah.
Love it.
Yeah. It's been a while since he dropped some good stuff.
Yeah.
Like 3 years at least.
Yeah. Anyone here from the States? You know, we had Indianapolis. Let's see. Anyone on the East Coast of the U.S.?
Probably not.
Probably not. It's okay. Watching from
Georgia.
Georgia.
We had some New Yorkers last time on Wednesday.
Yeah, in New York, Brooklyn, yeah.
New York.
New York. All right, I'm going to pause the music. We will get into it. All right. Sweden, UK, Connecticut, Tennessee, Queens. Tennessee. Awesome. Miami, but living in Ireland. Oh, I've always wanted to go to Ireland.
Hungary. Nice. Budapest.
We are in Raleigh, North Carolina. Aiden's in Alabama.
I'm on the Tennessee River.
Tennessee River. All right, guys, we think we just hit 100 people. This is great. I'm going to get started. Guys, we have a lot of value for you today. We have 11 pairs I'm going to go over the first half of the live. I'm going to take some questions. Don't ask me to go over any other pairs because we will be going over 10 more in the second half of the session. And then we'll have an intermission about 5 to 10 minutes between the first half and the second half. So guys, this live session is for serious traders only. I will have that. Oh, we have a Raleigh NC in the house. Nice. This is for, yeah, that's cool. I haven't spoke with anyone from Raleigh on a live session before. Cool. Yeah, so this live session is going to be for very serious traders, people who are looking to take and use smart money concepts as their base strategy in becoming fully funded traders. That is our goal, obviously, with our students. And we are going to be going over a lot. So I'm going to be going in depth on all of these pairs. So please take notes. Little hint, we are doing a giveaway at the end of the live session, and it will be based on one of the pairs I go over. So be sure you're paying attention and take good notes. Mark off all of these levels that we will be going over. So either write down the pair and then the price in which we're looking to take trades from, or if you have your computer with you, you can just simply have 2 screens and go jot down the exact zones of interest that we're looking at, because these are highly probable zones. Obviously, not every single zone will play out. Obviously, everything is subject to change throughout the week. However, this has I've been taking a lot of time, hours upon hours this past weekend, and doing analysis for you all today. So sit back and enjoy, and I'm going to get right into it. So I'm going to share my screen. Let's see. Alrighty, guys. Can you all see this? Let me know if you cannot see it. Give me 1 second, guys. I'll get started in 1 minute. Just waiting on confirmation. All right, great, guys. All right, let's get started. We have tons to go over. Let's go. All right, dollar index. This is very important. I like to look at the dollar index before going into my other major pairs, just because I like to see what kind of directional bias we'll be looking at for the dollar index. Hopefully that will transition over to the same directional bias for our major currencies. So let's start off DXY. Obviously, we've been on a bullish tear for quite some time now, and I don't expect this to cease really anytime soon. I do think we can push up into 110, so a few hundred pips away. I really do think that will be achieved. Now, it may not be mainstream yet, but I do believe we are in a recession right now. It just hasn't become official for the public. So that's going to create a lot of volatility, especially for the US dollar soon. So I do think that we can continue long, hit that 110 level before potentially reversing. But for the here and now, I do want 105,788 to be met. We can see that we are pushing up into our prior high. This is not a high in the market. Usually you don't see price action look like this when you reverse trend. If we're going to reverse trend, we're going to take liquidity. So we have liquidity resting above this level. So 105,788, I believe we will come up and hit that. Now, it's not to say that we're going to come and hit it immediately. Could we see some pullback before going long? Sure, we could. But ultimately, I think that we can potentially see some short-term dollar strength, maybe some semi-long-term dollar weakness, maybe like for the week or for the month, maybe having an overall pullback. I really do like 102,839. All right, because this is an accumulation zone that occurred and we pushed into an area of demand that actually tapped into prior market structure. So we accumulated, we sprung, we broke counter trend structure, we came down, we swept this low by a few pips, as we can see, and then we made our move. We also created a mini area of demand, pushed up, retested it with a liquidity run, sell to buy. So this is an area of demand I really would like price to come into. And we can see even with this low, we didn't even come into this mini level of demand. We're not in discount yet. This would be my discount for looking for longer term buys. So we may run this high short term, but have that overall pullback. That's what I would really like to see. So let's keep that in mind when we go through these major pairs. And as we run through them, let's see if maybe short-term dollar strength could lead to maybe more long-term dollar weakness. Now, this is obviously nothing is 100% in the market. This could do the exact opposite of what I say. because, nothing is 100%. However, through, prior knowledge in the market, having years of experience doing this, understanding how the dollar moves, the dollar loves to be, move quite erratically. We like to see sells to buys, to sell to buy. It loves to do that. So I would like to see some sort of maybe buy to sell to buy, something along those lines. So let's keep that in mind when we go through the rest of the dollar pairs. I'm going to go over AUD USD next. So maybe some short-term dollar strength before some dollar weakness. However, we have not come into our higher time frame zone. I think it's on the daily. Yes, daily time frame. We have not met this level yet. Now, this was a level, this was from 2020. So this was COVID, right? The black swan event that occurred with COVID. We had the major sell-off and then the major rally back to the upside. We can see that we were forming miniature higher highs, higher lows, and then we formed this imbalance. So the straight engulfing move, expansionary move, didn't pull back into it. So the market is quite inefficient in this level. So I would really like to see higher time frame 0.668 met before any potential long-term swings to the upside occur. We can also see that 688 or around 67 psychological level, so the imbalance fill plus this miniature demand on the daily time frame, also lines up with prior market structure. Look how this works. We can see the prior support, right? Support. We break through it, retest as resistance, fall, push up, act as resistance again, bust through it, but we never push back down. So this is a highly sensitive region for AUD USD. So I'm really liking 668. And if we kind of just move back over to the right, we can see that we have not come into that yet. So that will be the higher time frame level of interest that I will be looking for. And then even if we just scale out, we can see counter trend, we are in this bearish run. All right, so we should continue to look for sells until we reach that 668 level. All right, so by scaling right here, we can see that we have multiple levels. So upon any pullback, I'm going to treat it as an excuse to be looking for shorts. Now, what if price opens today, because the market's going to open in about 3 hours. If it opens today and even before pulling back, it comes down and hits this level, probably a few hundred pips away, I think, maybe 130, 135. So what if it comes down and hits this level? What happens? We pull back into these zones. Do we look for sells? Probably not. Why? Because the higher time frame objective is achieved. So once we come into this level, upon any pullback, it's a little scary for me to be looking for sells, just because that higher time frame level would have been achieved, and we could potentially be seeing a reversal or just some sort of higher time frame pullback back to the upside. Not to say that this is going to be, when we come into this level, it's going to stop. We could easily come lower, maybe fill in some imbalance here, or even maybe take out this higher time frame low that we made with COVID. Do I expect that? Probably not. But again, anything can happen, especially within this recessionary period that we really are going to be experiencing soon. So I'm going to say for the short term, for the week ahead, I will be looking for shorts until we reach 668. So let's go into the sort of levels I will be looking at. Start off with the daily time frame. We can see that just this miniature level of supply, we can see the sell created the support. We had the buy up from support, right? And then we engulf back to the downside. So simply this daily time frame area of supply and imbalance fill would be nice for a lower time frame pullback and continuation to the downside. All right, so we'll keep in mind that level, 4-hour level. That would be an area of interest to me. We broke the higher time frame low. We're looking to potentially retrace and then continue. Just basic market structure, lower low, lower high, lower low, lower high, lower low, lower high, and for that lower low back down 668 or 67. All right, so that's a potential area of interest for me. I also have, I believe it is, let me just check. Forget the time frames, guys. It's just so hard to keep track of which one it is. 45-minute, there we go. Okay, cool. However, we do have equal highs. I was really looking at this area of interest last week. We can see that on the hourly time frame. As we took descending liquidity, we pushed up into our level of supply, filling in balance based upon market structure, lower low, lower high, lower low, lower high. And then we broke the counter trend in here, making that lower low. So I expected that since this area of demand failed, we flipped to supply. This would be a perfect level in which to pull back into before looking for shorts. 693 would be that appropriate level. We also have imbalance here from this wick to this wick. So this would be a key level. Selling was, or no buying was offered in this candlestick, just selling was. So to make the market more efficient, I was really hoping that we would come up, create this drawn liquidity here, and then run to make a buy to sell, collecting all the stop losses sitting above these equal highs, filling that imbalance, and then heading lower to our overall objective. Obviously, we never did that. We just had the rollover. That's okay. And we move on to the next setup. However, I do think that this is still valid. If we get a higher time, or well, I wouldn't say higher time frame, but overall retracement, I still am looking at 693 to be an appropriate level for me to take a short. Because why? Well, lower low, lower high, lower low, lower high, low. This high created this low. We broke the counter trend, or broke this structure. We closed below this low here, right here. So this was the high that created this low. So technically, this is the range in which we want to be trading, right? So pullbacks here, here, or even up into here would be nice. And we know that we like premium when we're selling. So if we just pull a fib from the high to the low, we want to at least get back above that 50%. 61.8 happens to line up with this area, which I'll talk about in a minute. We're really getting up into that 78.6, that higher time frame area of premium price. And we can see that that imbalance that we talked about on the 1 hour with this prior demand and now supply also resides within this huge move. Buy into supply, filling imbalance, higher time frame, engulfing back to the downside. What time did this occur? Time and price, 2 a.m. Eastern Standard Time. Very crucial. Asian session, sweep the Asian session high, continue short. This is London manipulation, London open, right? For my time, I'm on Eastern Standard Time, so 2 in the morning, 2 to 3 in the morning, a.m. Eastern is London open. We like to see manipulation occur around those times. So we have 3 levels. Just this quick level here, just getting back into this higher time frame supply. We also have this 45-minute candlestick. Why is this important? And this kind of relates to USD CAD, in which Aiden created a video that's on YouTube now. And it's actually currently a question within our contest for our 30% off promo. I'll go over that later. But anyways, this is very similar. We can see higher high here, higher low, higher high, higher low, higher high, higher low. This is demand within this swing point. We made the higher high. We're expecting a higher low and a higher high. That's just basic market structure, right? So just based upon market structure, we should respect this demand, in which we did. We reacted from it, but we failed. We ended up making that lower low. So now the demand flips to supply. This 45-minute provides a nice opportunity around 688 to be entering into the market for shorts. So we have 3 levels, 1, 2, and potentially 3. Now, it's not about picking and choosing which one is valid. They're all pretty much valid, in my opinion. What you can do is you can place sell limits at each of these levels. That's personally what I do. When I have multiple levels of interest, I just place these limit orders. But the great part about it is even if you lose this one, obviously the stop loss here would go above the high. This one here would go above the high as well. And then this one here would go above this high. If you lose 1 and 2, you have 3. But the great part about it is that if you have a risk to reward that's higher than your initial risk for these 2 positions, you're great. So if you have a risk to reward at least of a 1 to 3 for this trade and you risk 1%, then if you win this trade, you make 3%, but you would lose 1% here, 1% here. So you would net 1%. So it's all about percentage return. If your risk to reward is lower, then it wouldn't even be worth it, right? So having the understanding of not only where you're going, 668 or 67, but having the proper risk to reward in multiple areas of interest, if there are multiple areas, you could be placing these limit orders, not caring where it reacts from because you already have done analysis in here and have a high probability chance or conviction that we're going to go short from either of these 3 levels. So let's just look really quickly, and I'll go over the next pair in a minute. Let's just say we enter right there. Okay, stop loss above this high. Let's just call it 38 pips. And then we'll go down to 6,680. That's a 1 to 6.5. So if you risk 1% in this trade and you win this trade, you make 6.5 minus the 1% that maybe you lost here and then here. So you would net 4.5%. So still would be smart to be doing so, in my opinion. Now, well, the question is, well, what if we just reverse? This week, next week, we reverse, we have a higher time frame pullback. Oh, well, you lose a couple trades in a row, but we know that this is the higher time frame zone, 668. You have that conviction. So what we can do is look to scale in upon the higher time frame retracements, because we know lower low, lower high, lower low, lower high. This is just a liquidity run in here. Just a liquidity run, not a break of structure. Liquidity run, we have distribution, clear distribution. I'll scale in a minute. And then we had the fall. So the lower low, and now really this is lower low because we never closed below this level. So lower low, we would pull back, make a lower high into premium, and then fall. Everything is fractal. The market is fractal, meaning everything occurs on every single time frame. So a 61.8 retracement here or something like that would be the same thing as a break of structure back up into the premium for maybe a 61.8 retracement in here. And we have this 4-hour level. Really, this is the key level because you can see the counter trend within this huge expansion move, the higher time frame pullback before the expansion. Higher high, higher low, higher high, higher low, failed to make the higher high. Demand turns supply, reacting from here. We never pulled back into that level, which still makes it valid. 716 psychological level. So that's what I'll be looking at. 1, 2, 3 levels. If we break and close above this level here, I will be looking at this level and this level. Still, even if we did take it off of this level here, having a stop loss probably right there. Like, yeah, 80 pips, pulling all the way down, 1 to 6. If you lost this one, 1, 2, 3, 4, you lost 4%, you made 6%, you netted 2. So still would be in our favor to do so. So mark off these levels, take a picture, whatever you have to do, and we'll continue from there. Next, Euro USD. We still have not come into our higher time frame level on Euro USD. I'm very shocked, but that's probably what's expected when we have higher time frame liquidity. We like to build it up and then take it. 1.0340. Remember that. 1.0340, the monthly low from 2017, the yearly low from 2017. We have not taken that liquidity yet. How much liquidity do you think is resting below this level? Tons. We haven't even come down into our level of demand yet, right in here. That's probably where we're headed. Now we can see a similarity between all these dollar-based pairs. We can see the monthly level here on EU. We can see the level here, 668 on AU, and there's a couple others I'm going to go over with GU and NU. But similarities here, we haven't reached our higher time frame objective on these dollar pairs yet. So we should expect maybe short-term dollar strength to push down into here because obviously XXX USD, dollar strength would push it lower. And that's exactly what we're looking for with the dollar index. Okay, so keep in mind 1.0340. Scaling into a lower time frame. We have multiple areas of interest. Okay, so let's not even take a look at this because this is irrelevant now because the market structure is right in here. Because why? Lower low, lower high, and now we're looking for lower low. So really we should be focusing on this level and really on any intermediate levels in here. So we had the distribution in price. We're slowing down in momentum. Okay, we had our last buy to sell and we broke the counter trend. We made a high, kind of failed to make that lower low. And then we had one candle that pushed up, took liquidity and came into an imbalance, and a sponsor candle actually on a lower time frame. I don't really have too much time to get into that. This also kind of took care of this prior supply. We came into it, okay, right in here, pretty much to the T. We had the rollover. We had this miniature level of supply that we were talking about a few weeks ago. We failed to push into it here. We rallied again, failed to push into it, rallied again, and now we did. Now we broke counter trend structure, closing below this prior zone, and now we're pushing lower. We can see the trend line liquidity, touch here, touch here, touch here. How many people, retail traders, do you think are buying off that third touch of the trend line? A lot. What does that tell us? We're going to go short. Retail always loses. They just do. Okay, so we're going to go short. We're going to reach 1.0340. May not be tomorrow, may not be today, may not be this week, next week. I don't care. I don't care if it doesn't even happen this year. It will happen at some point. This is a very, very sensitive level. A lot of liquidity resting below that. So let's go into our areas of interest because we know that we haven't reached our higher time frame objective yet. So this means we should really be looking for shorts into that objective. So the bias is still short, as it is with other pairs. Good confluence. 1 hour time frame. On Friday, I was looking at this 30-minute level. Now, what happened on Friday for me to see that this is valid? Well, we came into a prior buy to sell higher time frame, so prior supply. Okay, we pushed up into it. We rallied down. we created descending liquidity, lower time frame, and I'll just kind of show you. 10-minute descending liquidity. Okay, our last run, 6 in the morning. This is London session still. Push back down. Okay, created a miniature level of supply because we had lower low, lower high, lower low, and then this counter trend, higher high, low, high, low, high, sweeping liquidity, broke the counter trend, retested, continued. So this is our supply level. Okay, this occurred at 7 a.m. So this is a New York session open based area of interest. Time and price is very important. If you haven't seen my time and price video on Trading Nut, please go watch it. It's very valuable. Anyway, so this will be our first level of interest, this 30-minute supply level, also in balance. So around 1.0445, let's call it. Okay, so this is if we just continue with the overall, tiny lower lows, lower highs, stuff like that, just continuations. Well, what if, it is Sunday, market's about to open. What if we get a run on liquidity to start the week, create that high of the week, and then sell off? Usually we like to sweep Friday's liquidity upon market open or even on Monday. That's really what oftentimes occurs. And we have to expect that, and we have to be okay with that. So even though this is a level of interest, this may not play out. So we'll keep it there just in case, maybe what we can do is when price comes into the level, let's say that occurs tomorrow morning during New York session, and we create some sort of distribution or, equal highs, we can look for the run, buy to sell, break of counter trend structure, reaction from the level, and then we can easily confirm that this is going short because of the break of counter trend that we're seeing here, pull back into that sponsored move that took liquidity. Obviously, we have to see this at the right time of day, so either London or New York session, and then we take the trade short. So that would be good confirmation for something that we're not quite, we're hesitant about taking because we understand we could run Friday's high. So we just have to keep that in the back of our mind. All right. Scaling back out, let's go to the hourly time frame here. We have another area of interest. Now we have these different levels of supply in here. So this is still, sorry guys, it's a lot of notifications, a lot of areas of supply that we could come into. We have trendline liquidity, so that's really good because that creates the draw on liquidity for us to come in and take. Okay, we know we're going to go short. Where can we find an area of interest to short from? So we have that level here, about the 1 hour 50 EMA as well. We have this level here. We have imbalance. We have supply. This is kind of just in the middle of the range, right? That's okay. At least if we get back into premium price, that would be acceptable. So this would be around the 61.8 retracement, 1.052, 1.051, something like that, or 1.05 round figure, which would be actually, if we look at it, between that wick and that wick, about the 50% of the imbalance. But anyways, just anywhere in here. And if we break and come higher, then obviously this would be the region of price in which is, our last point of return before breaking structure. Well, actually, no, excuse me. I'm sorry. This would be the last point of return. So we have 4 levels, 1, 2, 3, and then 4. This is very crucial because we did not come into it upon breaking counter trend. We distributed. We had the run on liquidity. We can see the run on the high. We tapped into I think it's like a 30-minute or 15-minute imbalance and sponsor move, whatever. And then we fell, breaking the counter trend. We never retested that level, 1.06878. So obviously for the short term, we're based upon, supply that's going on in here because lower low, lower high, and then we broke counter trend structure, making a lower low. So we really want to be trading within this range from this high to this low. So either 1, 2, or 3, because to see the counter trend, we pushed up into that level of interest. Higher low was formed. We failed to make the higher high. We made the lower low. So this turns supply. Okay. So 1, 2, 3. If we push any higher, I will still like 1.06878 right in here. And then obviously if it goes higher from there, then we're just going to wait for confirmation. I'm not going to touch this pair, but I don't think that we will break this high. I really don't until we come back down and hit this level. If we come back down and hit this level first, the sells from here will probably be off the table. I'll just say that because the higher time frame objective will be met. And now we can potentially be looking for longs. So until then, I have 4 levels, 1, 2, 3, 4. So mark those off, take a picture, or just remember those areas of interest. So that's Euro USD. I'm going to go over GBP USD next. So GU is quite similar. We're still looking for dollar strength. We have sell side liquidity here from June 14th, so mid-June. And we will come down and take that. But where can we be pulling back into in order to be selling into that higher time frame objective, right? So let's go. First of all, let's look at the higher time frame here. We are below all EMAs, daily, weekly, yeah. Now, what's interesting to me about this, let's just take a look at what's going on here on the weekly time frame. Obviously, 2020, sell to buy March, COVID, Black Swan event, we had the rally. Look at this area of interest. And this was exactly what I was talking about within AUD USD. Look at the sensitivity that we're coming into now. Okay. Oops, didn't mean to do that. Okay. Support, support, support. Ran the liquidity. Popped right back above into the zone. Pulled back, didn't tap into that supply. Or excuse me, demand. We rallied to the upside, we pulled back, and now we're coming to that same level again. So really, we could be in for a higher time frame retracement. That wouldn't surprise me. However, if we just scale into a lower time frame and see this is not a low in the market, you don't see moves that look like this before going long. You just don't. This is going to be run, and we know that because dollar is still not done with this bullish run. We can see that from the dollar index and all the other XXX USD pairs that we just went over. So we have, in my opinion, I have three levels. So one will be, let's just look at the higher time frame first. Lower low, lower high, lower low, lower high. This is just a liquidity run. We never maintained momentum above this high. And obviously we knew that was going to happen because we haven't reached the higher time frame objective, which is down here. Right? We broke the counter trend structure, closing below it. This turned supply in here. We actually pulled back into it, and then we rallied one last final time, sweeping this liquidity, this high, and then we finally made the move. So really, this last buy to sell zone is very interesting to me. We also have the imbalance fill. So anywhere between 1.243 and 1.247 is my area of interest if we do have the overall retracement and take out this high, because this could act as liquidity because we never really pushed into this higher time frame zone. And that would go well with higher time frame market structure, low, high, low, right? So that's what we would be looking for if we do close really above this distribution that I'm going to go over in a minute. 1 hour time frame. So those are the two levels I'll be looking at. Now, before coming into this low, I would like to see continued pullback. And I really want to see price get into, I think it was maybe the 2 hour. So guys, this is why you can't just look at one time frame. You have to just move from time frame to time frame, looking at what looks good. So you're in right here. This is what looks good. 4 hour time frame between this wick and this wick, imbalance. And this occurred after we distributed, and then we broke counter trend structure. So this is a very highly probable region of price around 1.223, 224, 225, right? And then obviously this is your supply right in here because we failed to make the higher high. Okay, so this is my area of interest. Mark that off. We are below all EMAs. Going down to the 1 hour time frame, we can see the distribution that occurred. Let's see here. Yep, we had our distribution. We had our run on liquidity, this descending liquidity. We made that final run to the upside, coming into a supply level that came into a supply level. Okay, we then failed to make that higher high, kind of chopped around a little bit, created a high here, and then rallied to the downside, closing below prior market structure. So that confirmed the shorts for me for continuations to the downside. So really in here, when price was floating in here, I was really hoping that we would get that retracement back up into the supply or imbalance level. We never did that. We kind of just continued lower, lower, low, lower, high, lower, low. If we can see an overall retracement into this zone, I will be looking for sells. All right. So that's GBP USD, one level here, and then 2 and 3. I guess you can just call it 1. So pretty much 2 levels down into 1.1930 would be very nice. So that takes care of the dollar index, AUD USD, Euro USD, GBP USD. Let's go on to NU. Nzd USD. Okay. So now this is where it gets a little interesting. Nzd USD has come into a higher time frame level. I've been talking about this level for a few weeks now. We can see that we have come down into our demand, higher time frame demand. We have tapped into it. Even though we have come down into it, based upon the other pairs, I think that we can come lower. I really do. I think we can come into maybe 0.61. maybe 0.6. Okay, let's look at the higher time frame. What are we doing now? I don't often do this kind of analysis on the weekly because it really doesn't matter to me. The weekly is really for directional bias for the week and higher time frame objectives. We can see here, and this just goes to prove how the markets are so fractal. Even on the weekly time frame, we have equal lows. Even on the weekly time frame, we have sell to buy. Even on the weekly time frame, we have accumulation, demand, breaks of structure, imbalance. It's all the same. It's really artwork. It's pretty beautiful. Anyways, so we had the low in the market, right? We rallied, we pulled back into prior market structure, and we moved from there. So demand has been created in here. Obviously, a lot of imbalance weekly time frame. This is all the way back in 2003. We created equal lows, rallied, and then rallied back to the downside. This is 08. This is the 08 crash. Remember that? I'm sure a lot of you remember and probably have PTSD from the 08 crash. Anyways, we pushed down into that demand all the way back from 2002. Now that works. We mitigated in 2009 from a 2002 level. Isn't that crazy? Anyways, daily time frame. Let's go all the way back here. We accumulated prior to that zone. Oftentimes before reversals, we start to slow down. We start to build orders. We offload orders, and then we rally and then continue with the overall direction. Okay. So we mitigated that zone accumulation. This is the break of structure, the counter trend break that we saw. And then we kind of had the retest. Didn't quite come into the high here, which kind of created the imbalance between this wick and really this wick here. So really we wanted to come deeper. But we never did that. We ended up rallying again back to the upside. But again, it's just market structure. Higher high, higher low, higher high, looking for a higher low, and exactly what we did right in here. 2020, I guess this was the excuse for price to push down into that exact zone of interest. Look at how we just mitigated, well, not really mitigated, but filled imbalance set from 2009. We did it 11 years later in 2020. It's pretty cool. Everything has a purpose. Every single move is not only planned by the central banks, but it's also has a purpose. We created liquidity. Equal lows from 2015 all the way over from 2019. We reacted from that low, violent run, and then we had a pullback, right? Or really an expansion, okay? And that's really what created this area of demand. We ran the liquidity into an area of interest that resulted from accumulation into a prior zone of demand that reacted from market structure. This was back in 2000. Imagine that, everything playing out from 2000 to today. Really kind of cool. Demand, sell to buy. We had the sell to buy, the reprice, the continuation. A lot of imbalance in here. So that's why we're coming back down into that level. So it's highly sensitive. Now I'm kind of going into the here and now. Again, we are still in a bearish downtrend. Lower low, lower high, all the way out from the high here, February 2021. Okay, we're on a bearish run, higher time frame. This was the overall objective. We finally came into that last week. So does this mean that we're done with the downtrend and now we're looking to go long? Potentially, definitely. I think that we are going to see higher time frame shifts here soon. Within the coming weeks or the coming months, I do think that we will be getting ready to see a shift in dollar. I think that dollar will die, higher time frame or long term. We can see the equal lows prior to the level. We had the sell, we had the reaction, we have the buy. Okay, this doesn't mean that we're done though, because again, looking at all the other dollar pairs, I just don't think we're done yet. I think we will continue lower. So even though we see this reaction, you know, this is where experience comes into the market. This is where having years of experience will really help you. Even though you have so much confluence, you know exactly why price is doing what it's doing, where it's looking to go, and the areas of interest it looks to react from. That's why our strategy is so precise, because we understand things that have happened in the past. Equal lows, sell to buy from that level, but going based upon the higher time frame levels on all the other dollar pairs, I think will come lower. I still think we'll run this low. So I'm still looking for shorts. That's my bias for the week. Could I be wrong? Absolutely. Sure. But for now, I'm going to be looking for shorts. When would I be looking for longs? Well, this is the low that made this high. this is the high that made this low. We would really need a firm break above this structure. So 4-hour level, I really want to get back above this level. If we have a strong rally, then yeah, any pullback would be good for continuations long because the higher time frame objective technically was met. But my gut says we're going to come lower. So where can we be looking to short? Well, again, similar to AUD USD, lower low, lower high. This is just a liquidity run. Took the high from May 2022. Rallied down, made that lower low, lower high, came into an area of supply. We actually gave that level out to our VIP. I don't remember when that was, probably sometime in here, June, mid-June, so a couple weeks ago. Pushed up into it, nice reaction. And then again, we pushed down, failed to make that higher high, and then we fell. So this creates the new supply, right? So this creates the new supply. We made that lower low. So we broke the counter trend after coming into an area of interest. We do technically have relatively equal highs, and this could be good for, drawing liquidity later on. But for now, this is the area of interest. Imbalance, tiny area of supply. Really, this is the overall area of supply. So we're just really looking to get back up into this. And we did. We got back up into it to the T, then we fell. I was thinking that this would be an area that we could be looking for a buy to sell. Why? Because this isn't really looking like a high in the market. Maybe lower time frame, it could look like distribution. But to me, this looked too much like liquidity, that we would run it and then fall, coming deeper into this supply here, right? We didn't do that. We ended up rallying back to the downside, and then we actually came into an hourly buy to sell, kind of a supply level here. I didn't sell it from there because obviously it wasn't clear, but I did sell it from here, and I did sell it from here. Not there, though. Okay, then we rallied, made a lower low. Okay, so where's the structure? Lower low, well, not yet, but low, high, now the lower low. Lower low, lower high, lower low. All right, we ended up creating liquidity. I was really hoping we'd pull back up into this 4-hour level, because this is the 4-hour level of supply, also in balance. And we were below the 4-hour 50 at the time. Well, we still are, but 4-hour 50 was floating in here when price was in here. I was really hoping that we would get up in here because, one, that would be the mitigation, imbalance fill. Also, draw on liquidity, take out this liquidity here from the trend line, and also the higher time frame objective. We ended up coming into it. However, I still think that this is still valid. I do like 0.62816. So mark off this level. I am still interested in it. Because really, technically, this high here created this low. This is the high that created this low. So really, this is the range. So in all reality, I only have one area of interest here for Nzd Usd, and that is 0.62816, because everything else has been taken care of. If we do get an overall pullback, well, we'll just have to, we'll see what happens. But at that point, if we close above this level, we're probably going to be bullish because we've already filled that higher time frame objective. But I do think that we can still come lower. So 0.62816, my level. Okay, that's Nzd Usd. Now we're going to be going over USD CAD. USD CADs are really interesting, and I really, really like this. So we've been talking about buys from this level for a while. We've been talking about buys from this level buys from this level, and then buys from this level here, 1.25. And people in VIP already know this because we've already sent this out before. So accumulation, higher time frame accumulation into an area of demand, sweeping these equal lows. Higher time frame, we are bullish. We can see that we're kind of in this pullback phase, right? We've made a high, we've made a low, so we failed to make that lower low in this overall downtrend, and we made a higher high. So now we can consider ourselves in this pullback counter trend move. But lower time frame, it's an actual bearish trend, bullish trend. Higher time frame, it's just a pullback for a continuation short. So where are we looking to come into higher time frame? Well, that occurs right here. I think that 1.35, and we can see 1.35 right there, happens to line up with just about this last buy to sell here within the supply. We could come higher, definitely into this supply, definitely valid. I think that, maybe 1.39, 1.3850, something along those lines we have in balance here. But going to the weekly, we can see that we had our pullback, higher low, higher high, higher low. We reacted from this demand here, also filling this gap. But then we failed to make the higher high for the continuation in the bullish trend. And we ended up making the lower low. So this flips to supply. So really this level and this level are my higher time frame objectives. I would say 1.35, and let's just go 1.3850. Okay, so 1.3850. So still, we have a long way to go. We have a lot of liquidity to take in here too. So higher time frame, we're bullish, right? But I would like short-term sells, because let's go to the 4 hour here. Not only, did we accumulate, we broke counter trend structure, we pulled back into this, area of demand here, 1.25 psych level, and then we made the higher high. We pulled back again, called this level out again, made the higher low, and then the higher high again, right? This is a higher high. This is not equal highs. These are not equal highs. Why is that not equal highs? Well, we ran liquidity. We ran it by a few pips, maybe like 5-10 pips, but we did run the high. Higher high was formed. We're looking at a higher low. Where is our area of interest for buys? Back down really into be so much imbalance. This last sell to buy, maybe getting deeper. I mean, this is kind of tough because this is such a strong move. Do we expect a 90%, 80, 90% retracement? Probably not. But if we do get into it, that would be a nice level to buy from. So really from here, 1.2686 and 1.261 would be our overall objectives. So how do we know that we're going short? Well, we, 1, swept liquidity. 2, failed to make the higher high and made the lower low. And yeah, that's pretty much it. We created a high, a low, a high, a low, failed to make that higher high, made a lower low. So 1 drive, 2 drive, looking for that 3rd drive into the low, A into B into C, something like that. That's what we'll be looking for. And then obviously we have our higher time frame objective at all the way up at 1.35. See how we're planning all of these potential trades before this happens? We know exactly where we're looking to sell short term. Well, I'll go over it in a minute. We know exactly where we're going to be looking to buy. We know exactly where we're going to be looking to potentially take profit and maybe sell this. So we're planning all of this out from A to Z. You have to do that. You have to plan your trade. Know exactly where, not only where you're getting in, but where you're getting out. That your exits are just as important as your entries. So now let's look to scale in. So we swept the liquidity, right? Just by a few pips. We did. Now I think, was it 3 hour, 2 hour? I forget. Screw it. Let's go to 3 hour. Okay. So we made the higher high. We made the higher low. We reacted from the prior market structure. What do we expect? Well, a higher high, just based upon market structure, a higher high, right? Obviously, higher high, higher low, higher high, higher low. Higher high is expected. We did not do that. We reacted, but then we ended up falling back to the downside, right? So technically, we're still bullish in here. Even when we started to rally, we were still bullish, right? Because we never closed below this zone. But the fact that we reacted from this level and made the lower low is quite interesting to me. So obviously, I was not looking for shorts in here because we haven't broken the counter trend structure, which is right in here. However, we did create liquidity. We took it, buy to sell, and then fell coming into this 3 hour level. The reason why we came into the 3 hour level, and no one really could have anticipated it, in my opinion, because we were still bullish. But the fact that we did, the reasoning behind it is because we reacted from prior market structure, pushed up the demand here, flipped to supply just kind of prematurely, right? So we flipped to supply, we create liquidity, we push up, took that liquidity, came into that level, and then fell. Now, this was the contest question that I had within our 30% off promo special that's going on for a limited time. By the way, we're probably never going to do 30% off again. That's really high, but wanted to do it because I love 4th of July. And I really want you guys to, understand these concepts. And I know times are tough. We wanted to make it affordable. Anyways, this is a key level. We talked about this. Aiden made a video on YouTube about this. If you haven't seen it, go watch it. It's really kind of cool. The reason why this is a highly, highly probable region is not only because of everything else I just talked about, but because of the fact that we made our counter trend higher, high, higher, low, high, low, high. We failed to make the higher high upon coming into the demand. We made the higher low, but we failed to make the higher high in the sequence. We dropped below, closed below counter trend structure. Now the demand has flipped to supply. So that's your answer in answering the question. All of you who have answered it have gotten it right. I'm very proud of you all. We flip to supply, we have the imbalance. So not only did we sweep liquidity, we swept liquidity here, buy to sell. So that's a confluence coming into a supply region, broke counter trend structure, imbalance, demand flip to supply. So much confluence going on. What else do we have? Drawn liquidity, equal highs. How many times do I say it? We usually always create some sort of liquidity prior to coming into a zone. I would say 99.9% of the time. That's just how the banks free up liquidity to add their contracts, right? So reacted very beautifully off this level, and then we fell, and now we're looking for shorts. What I really don't want to happen, it could happen because oftentimes we run Friday's high when we start the new week, right? I don't think that'll happen, but it's always a possibility that we come up one more time, maybe come deeper into the supply level in here, maintain our bullish structure, run it, and then fall. I don't want that to happen, but if so, oh well, we'll still look to short this market because we know that, or short this pair because we know that we're going to come into this level. Highly probable, I should say. But we did have a reaction. Okay, so that's very, very good. 10-minute time frame. I actually gave this out to our VIP crew. I saw that we made this high. We tapped into it, had a reaction, right? We ran it one more time, and then we fell and made the counter trend break. We closed below this level right here, that candlestick. So I said, okay, well, we could just pull back up one of two spots. This 10-minute supply level with the imbalance. In this case, we did. And then I think we also had like some 5-minute imbalance here, but called that out to the exact pip, 1.2936. We can see that the high for that candle is 1.29362. So we came up by 2 pipettes. So good. Then we rallied to the downside. Now we have broken the counter trend structure. Higher high, higher low, higher high, lower low. So we should expect a pullback to short, having already filled imbalance and reacted from the original zone of interest. A lot of confluence here. So mark off this level. This is a key level. Okay, right in here, just small continuations, pull back into probably 1.291, 1.2905. Not to say that we can't come higher than this level. If you're going to short it from here, don't play stop here. I just don't think that that's smart. Just because I have a box doesn't mean the entry's here and the stop is here. Entry can be here, but stop really should go above the high. Okay, because we really could come higher, deeper maybe, and then fall. Right, and that would even be better because then we would fail to make the higher high here. This would turn supply. We would look for pullbacks to short down into the level, higher time frame. Okay, so that's my area of interest for USD CAD. Mark that off. A lot of confluence surrounding shorts, and we're looking for that third drive into the low. 1 pullback, 2 pullback, 3. The market loves to move in 3. The number 3 is very key in Forex. It's very crucial, very important. So looking to drive lower. USD Chef. Let's go over this. Very similar. Very similar. We're looking for shorts on USD Chef. But again, short-term dollar strength for semi-long-term dollar weakness. Exactly what we're looking for across the board. Okay. So higher time frame. Let's do it. Yes, we have relatively equal highs. So we know that we probably will come higher overall, but we're not done with this overall pullback. I really do think that within this sort of, reaccumulation, I should say, just this mini uptrend, higher high, higher low, higher high, higher low, filled in balance, rallied, higher high. We really should be coming into our demand again. Okay, so filling up in balance, coming into discount. I want to say 938 or 9.4 psychological level, and we still haven't met that yet. So continued shorts are what's expected. If I just get rid of all these drawings, we can see that we're tapping into that daily 50 now. We really should roll over. So 4-hour time frame. Maybe I should go lower. 1 hour. Okay, so what do we have here? Well, we have, let me see how I can just describe this. Structure, lower low, lower high, lower low, lower high, lower low. Okay, we got all that, right? We have a lot of liquidity, which we ended up taking. So we actually tried to sell it. I believe, where was it? Was it in here? I think I tried to sell it in here or in here somewhere this past week. Ended up getting a reaction, but didn't get the follow through. Ended up losing on that trade, but oh well. I got an entry from here Friday. Why is this a key level of interest? Well, one, because this buy to sell came into a lower time frame area of supply. Very true. But also, when we fell, we also repriced. So I think it may be 15-minute. So guys, I did so much analysis over the weekend. I can't remember exactly what time frame. Yeah, 15-minute in here. Okay, so we made lower low, lower high. We fell, kind of pulled back a little bit into this supply level, and then we just absolutely died from there. We can see if we pull a fib from this expansionary ball, really pullback move, but this imbalanced move, buy to sell, 50% lines up at 0.96411, right before that level of supply. Okay, that's exactly where we came into. Exactly where we came into. So I have two levels for this. Two levels. One will be, well, go to the 5-minute. One will be here, just short term. We can see that we pushed up into that area of interest, higher time frame. What else did we do? We distributed. We distributed in price. We broke counter trend structure. We failed to make the higher high as expected. We made a lower low. Overall lower low was really right there when we broke this, right? So I'm looking to pull back into just prior supply, which is right in here, okay? So if we go maybe 10-minute, we can see that more, 15. Yeah, just really back up into premium price to test the demand that we created. You can see this is really start of the demand level. Excuse me, supply level. Gosh, I keep getting that mixed up. Supply. So pull back into that premium level. 96150, roll over to the downside. Now, if we come higher and we do run this high, I still like this area of interest, this 15-minute level that we just spoke of right in here. I still would like to sell it, stops above the high here. If we come higher, I'm probably going to leave it alone. I don't think that I'll be looking for shorts if we come any higher than, let's say, 968. 968. Won't be looking for shorts until, we see more price action, and I'll just leave it alone. Okay. So those are my two levels on USD Chef. We'll be looking at 96150 and then 9643. Okay. So obviously you guys know where to place your stops. So that's USD Chef. Next, USD Jpy. USD Jpy, there's nothing too pertinent on this. And it's sort of confusing because we made a higher high, higher low, higher high, higher low. We did react off of this demand. However, we're not in overall demand yet. I think that we should probably be pulling back into this area of imbalance in which we swept all this liquidity, major sell, major buy. I think we can possibly sweep this low. This doesn't mean we're going to break structure. That just means that we're probably pulling back deeper because this could be an overall pullback, right? Maybe into 61.71 golden region. So that could be an area of interest where we're looking for shorts. This would be a pretty decent size stop loss, 185 pips. And I'm sure that not a lot of people would like that. But I don't really care about the pips, right? Because what about the risk to reward? Well, let's see. It's probably still not good anyways. Yeah, it wouldn't be. It'd be 1 to 2.6. That really wouldn't fit my rules. So what would I look for? If I know a level, or if I see a level that's highly probable, I think we will come lower, guys. I really do. I will be looking for some sort of accumulation, just some sort of liquidity. I don't care what it does. Just some sort of sell to buy, whatever. Create liquidity, take it, maybe come into something lower time frame right there, break counter trend, and that would give us not only a better risk to reward, but more of a confirmation to be looking to buy into our objective. Okay. So I really don't see too much on USD JPY. I know that we will come higher because let's look at the higher time frame. Weekly. There we go. So we did sweep this high. Okay. I do think we're going to come a little bit higher into an area of imbalance. So between this wick and this wick, we have a little bit of imbalance. This is really where we started to stall. High, low, high, low, high, low, high, low, right? Demand failed to make a higher high. We fell, kind of retested and continued, left a little bit of imbalance. So around 139 or 140, that would be a nice psychological level. That would be nice, even if we don't come and take this high. We could easily come and take the high, but even if we don't, I feel like 139 or 140 is still on the table. So I think we'll come and have one more run, potentially before rolling over. So with that being said, we're not done with the bullish run, in my opinion. I do think we'll continue, but I think that we could see some dollar weakness coming into this level first before potentially rallying and making a higher high. I could be wrong, but that's just what I see. USD Jpy doesn't look as pretty as the other pairs I went over. So, but I figured I'd go over it because I know a lot of people do like to trade it. All right, I have a few more before we break. So GJ. GJ is really cool, actually. Where is it? Yeah. Goodness gracious, where did I put it? It's right there. Gosh, man, I'm losing myself. Okay, GJ, 4-hour time frame. Let's actually go to the daily. Where are we looking to come into? First of all, where is the direction? We're bullish, right? We swept this low just by maybe 10, 15, 20 pips or so, right? So we swept that low, and then we made a higher high. So we're currently in this pullback phase. I don't care if we're bullish or bearish, whatever, we're still going long, because if we're bullish, well, then we're going long. But if we're bearish, we have to come into supply first, because we've broken counter trend in here, looking to come and hit this overall objective. Again, why is this supply? Why is this key supply? Well, again, high or high, low, high, low, high, low, high, and then we made the low, right? We failed to make a higher high. Really, this is the low that created this high. So we pushed down deeper into demand, but we failed to make the higher high, flipping it from demand to supply. So we can clearly see that with the weekly time frame. 180. Look at where 180 lines up with. Key psychological level, round figure, 180.000 lines up perfectly with the open of this supply zone. You see how, and I say this all the time, you see how these psychological levels line up with these areas of interest? Why do you think that is? It's a rhetorical question. Why do you think that is? So going down to a lower time frame, I really wanted price to get down into this discount, this last sell to buy. We just missed it. If we break structure in here, which I'll go over in a minute, I would still like to buy it from 155.2 because we haven't come into it yet. High, low, high, low, high, low, coming into demand, sell to buy, higher high, higher low. Yes, we made the higher high, but I still think this is still valid. If we come lower, I will still be looking for buys from 155.2 to take this liquidity here. Okay. But in the short term, I will be looking for buys. So we made the higher high. So what do we naturally expect? A higher low. Well, let's pull our fib. The fib is really used for just getting down into discount or up into premium, right? Since we're buying, we're looking at getting down into discount. We know 61.71, 78.6 is our golden region. This is really where we want to be pulling into, because why would you want to buy at a premium? You don't buy groceries or shoes or whatever you buy at premium prices. You always want to get the best bang for your buck, discounts, right? So we're in discount. 61.8, 71. We're into this. This is really the entire demand, right? But I kind of chose this last sell to buy. It kind of looked interesting. We actually pushed down into it, and I did buy it. Had a very small position. Didn't risk much at all. But still in this trade. But I confirmed it. Well, I say confirm, but confirm is not 100% in investing, Forex, trading, whatever you want to call it. It's just highly probable. That's what I mean by confirmation. I actually did make a video about this. I made a time and price video. We pushed down into that demand of interest. And guys, if you want to go fact check me here and go say, oh, well, you didn't call this out. Those of you who are in VIP, go look. I call out all these levels, and you guys know this. So we accumulated prior to coming down into this level. What time of day did this sell candle form before the buy and the rally and the break of structure? 7 a.m. Eastern Standard Time. That's an hour before New York session open. Between the hours of about 7 to 9 a.m. Eastern Standard and between 2 and 4 a.m. Eastern Standard Time. 2 to 4 a.m. is really your prime London session manipulation because it's London open, right? So you got to look for your Asian session high and low. New York session, 7 to 9, because we know stock market opens at 9:30, is prime New York session time for manipulation. You want to be looking for where is your liquidity? That was the question on one of our other live sessions for our giveaway. What do we look for? What's the question we ask ourselves when we open up a chart in the morning during London, New York session? where is the liquidity? Key for determining, well, one, liquidity, but two, what could occur during these times of day between 2 to 4 and 7 to 9? Well, we had that sell to buy. That's exactly why we mitigated that exact level here perfectly, right? So we accumulated, we rallied, we broke the counter trend, BOS. We didn't make a higher high yet. And, I wouldn't say it's concerning, but I really would have liked that to happen because that would tell me, okay, higher high, higher low, higher high. Now we really shouldn't be trading below this level. But we didn't make a higher high, but I was still really interested in this zone here. We created more liquidity. What is this? If you kind of can look at it like this: shoulder, head, shoulder, retail, sell, entice the sellers, plop right back up. I think that's what's going to happen. We always look at retail patterns and we do the opposite, right? If there's a key retail pattern here, especially, the head and shoulders, and there's an area of interest here, you darn well know I'm going to be looking to buy because all the retail traders are going to be selling upon the break of the neckline. It's just an excuse for price to mitigate and then move the opposite way and take their stop losses, right? Look at where retail is. And this is really good. This trading retail to start really helped me understand smart money more because I was so involved in retail trading 4 or 5 years ago. That's how I started. And understanding all these different formations and trend lines and everything, now shifting over to smart money, I can see my thinking when I was a retail trader. And now having the understanding I do within smart money, it's so much easier to play off these levels because now I just look at retail and I'm like, okay, well, here's what I would have done years ago, but now I'm going to do the opposite. And it's been amazing so far. So we mitigated that level. We have imbalance. We have the open of the last sell to buy. We came into it quite nicely. There was a 15-minute zone on a lower time frame, I believe. Here, we go over. Yep, we had the last sell to buy, reprice, continue. So we pushed down into that zone, and we had a reaction from it. We haven't broken counter trend yet. So to confirm it, really, I want to see more bullish momentum. Maybe a closure above 164.36. That would be nice. But we can see that we had a nice sell to buy reaction from it. Okay. We had our low, we had our mini pullback, and we had a strong sell into it and then a fast reaction right back to the upside. So 162.65 would be a nice level to be looking for buys. That would be nice. But we need to see really the mitigations occur during the right time of day. What time did this mitigate? The 161.828 level that I had over here. What time? 10 a.m. Eastern. Really between 10 and 11 is really where you're seeing the last moves of the day before before London session closure. So you have your last move to get in 10 a.m. and then you rallied for the rest of the day. Okay. So looking for continuations long. So we'll be looking for buys, 162.65. Where? Well, you got to go to the higher time frame. Again, I think we talked about this, right? Yeah, we did. 180. That's right, 180. We'll be looking for longs into 180. If we break this low, if we close below this level, if we have a candle closure, not a wick, a candle closure, a body closure below this wick here, I will be looking for price to come into that 155.2 level. And I will be looking to buy from this sell to buy because I still think this is valid because we didn't come into it initially. So 2 areas of interest to buy, 162.65 and 155.2. Now, don't think that all these levels I'm talking about are the only levels throughout the week. There could easily be levels. Heck, what I talked about before, this is the low that produced this high. We pulled back, but we failed to make the higher high. So technically, this is still the range. So we could easily come down, I don't know, maybe come deeper into this demand, I don't know, something in here, who knows, and create some liquidity, some sort of sell to buy, having broken through this level and not even reacted from our other level, but create liquidity, sponsored move, right time of day, break of counter structure. That could be a trade that occurs sometime throughout this week, right? Obviously, I don't know what's going to happen this week. I can just give you areas of interest to be looking for. But again, throughout the week, there will be intraday, intra-week plays that could form, right? And that's something that you're just going to have to take advantage of. Obviously, our VIP crew will obviously get these updates every day, so they know exactly what's going on. But for you people who are just tuning in for free, obviously that's still perfectly okay. I love giving this stuff out. I love doing this. But these would be your levels. 162.65, 155.2. All right, GBP CAD. 2 more before we break. So, GCAD. Daily time frame. What are we doing? We're bearish, right? We're bearish. We're continuing to sell off. I don't know if there's really much going on down here. We're kind of just in a free for all right now. We're below all EMAs, currently just looking for pullbacks to short. This is not a low in the market right here. This is sell side liquidity. We haven't come down into it. So that will be run. 1.548 will be met at least, right? So let's see what else we had. This is really kind of cool. And this is what you do. If you just take a couple hours and do analysis, you'll start to see all these levels. It's really kind of interesting. So let's start off maybe with the hourly. Yeah, see that. Hourly time frame, right? Buy to sell. What time of day? 9 a.m. Buy to sell, sweep liquidity. This is the high of the day, probably the high of the week. And then we rallied, made the lower low. We pulled back, created more liquidity, high in here, pushed down, had our last buy to sell. What does that create? Supply, right? We had a push up into it, mitigated it, and fell. We didn't come into it here. Why does that happen? I say this all the time. It's just building liquidity. Oftentimes when we create demand or supply levels, in this case supply, and we pull back, oftentimes we don't pull back all the way. And then we make lower lows, and then we higher time frame pull back into the level. So don't think that, oh, well, we made a low, we made a high, and then a lower low again. Now this is invalid. This is still probably valid. Obviously, you can probably be shorting from here as well, maybe from here as well. But when we have an overall pullback, don't think that it's break of structure. Maybe just think it's an overall retracement back up into the zone that it was always meant to go to, right? So we ended up, again, creating liquidity, ascending liquidity here. Kind of accumulated, pushed up, Probably could have caught a couple trades in here. Anyways, we rallied, buy to sell. We came into it perfectly, filled the imbalance, tapped into the supply that reached this buy to sell to the T. We can see that higher high, low, high, low, high, low, high, low, failed to make that higher high, lower low. Okay, so now the structure has really shifted on a lower time frame. And we can see that this failure to make a higher high actually filled in the imbalance from this last buy to sell here. Okay, so that was nice. Overall, the structure is still here. High, low, high, low, high, low, high. Have a reaction here. I think it maybe have been a 3 hour or 2 hours. Just 3. All right, we're just going to call it 3 hour. I don't care. 3 hour time frame. This is the demand. We pushed down into it, reacted from it, but then it flipped. We made a lower low, flips to supply. So that's probably why when we pulled back all the way up into this zone here, we tapped into that level perfectly. So that's, another reason why you should probably maybe focus on just a few pairs, because if you focus on a few, you'll be able to see all these interesting levels and all these cool, candlesticks and, the exact candlestick and probably which to play off of depending upon, obviously all the concepts, right? But notice 1.6000 right there, pretty much. Psychological level, where it flipped from demand to supply after the higher time frame zone was met. What else? Draw on liquidity, equal high, right there, equal highs right there. Take the liquidity, mitigate, short off. Stuff happens all the time. It's just about being patient enough to wait for these setups to occur so you're not forcing yourself to trade unnecessarily. Okay, so this was a beautiful setup, psych level, all those other confluences. Okay, we ended up falling back to the downside as expected, creating a lower low. That would be the overall sell side liquidity to be run. Okay, so we ended up pushing up, lower low, lower high, and we made that lower low. So three potential levels here. We have one level, well, I think it's maybe four levels here. I'm actually going to get rid of this level. I don't like this. Let me get rid of that. Scale into maybe the 15-minute. Okay, so we can see that just lower time frame structure says lower low, lower high, lower low, lower high, lower low. So this would be a lower high for a lower low. Easily could happen, right? I would like to have an overall retracement into our higher time frame areas of supply. But if you are placing orders here, be careful, use good risk management, maybe look to confirm the trade before selling. But anyways, we can see that this high here ran our descending liquidity. We ran this high, and then we formed more descending liquidity here. So this could be an area of interest where we'll be looking for sells. So somewhere around, 1.5690, 1.57. But 4-hour time frame, I think that if we have an overall pullback, really our failure to make our higher high, so a demand to supply flip is really right in here. Because we made our high, we made a low, we could naturally expect a higher high, even though we weren't because of confluence in here. But just basing straight off of market structure, we failed to make the higher high, and then we broke and made the lower low. So this flips to supply. So 1.578, 1.58, 1.5850, anywhere in here would be nice. And then also our last point of return in this supply level here, because we failed to make the higher high. So that last buy to sell, and we have imbalance in here as well. So really anywhere in here would be valid, and then maybe somewhere in there. So mark off those levels. I will be looking to short GBP CAD as I'm looking to short USD CAD, right? So looking for CAD strength, and I think that's what we'll be going over on the latter half of this webinar. When we go over CAD J and CAD Chef, I think we're going to be looking for longs there. So that's GBP CAD. Mark off those levels. We'll be looking for shorts this week. All right, last one, Eurocad. So again, we're looking to sell Eurocad. We have not come into our higher time frame level. Where is the higher time frame level? Go to the weekly, and we will see. Well, actually, let's go to the daily. Well, for one, we have all of these equal lows. So we know these are going to be run. This is going to be absolutely destroyed. But where is the overall objective besides just this liquidity? Well, it's right in here, 1.32 really. That's really my level. Why? If I scroll over all the way to the left, what we'll see is right in here. We have an area of demand that we haven't met yet. We sold into it, consolidated, accumulated lower time frame, expanded, creating liquidity to then be taken. Right? So we're taking the liquidity now, we're filling up some imbalance, and I really want to get back into 1.324, 1.325, or 1.32, psych level there, getting back down into this higher time frame demand, right? Why? Higher high, higher low, higher high, looking for an overall pullback, higher low. We could easily break through it if we are to go short, but if we are to go long, we need to come into this level. So lower time frame shorts are definitely in order until we at least come into 1.32. So 4-hour time frame. Let's see what we have. I did call out this level, I believe, maybe a month ago or so. We had this level of supply that we were chopping around. We were making relatively equal highs. Okay, so the draw on liquidity, we made a lower low in the market, we made a lower high, and now we're making lower lows. When we pulled back, obviously we knew that we needed to come into 1.32, especially when we started to push up from here. Draw on liquidity, equal lows. Okay, we pushed up into it, sweeping the equal highs. So the draw on liquidity there, buy to sell perfectly into that supply. Why is this supply? Again, high, low, low, high, low, failed to make a higher high, push down, broke structure, switches to supply. Right? So we pushed up into that quite nicely. 1-hour time frame. Once the reaction was seen, again, very similar. High, low, high, low, high, low, high, low, high. Low here, we reacted, failed to make that higher high, and then we kind of broke counter trend structure here, and we pulled back into our supply level perfectly, fell, kind of created more supply as we fell again. So that lower low, lower high, lower low, that really confirmed it for me because, well, really this is the low that failed to make the high. But nonetheless, we rolled over, made another lower low. So any pullback into this zone would be valid. We ended up falling all the way back down and stopping, creating triple equal lows. So much liquidity being built up. We pushed all the way back to the upside. And look at that, perfectly mitigated this level at 1.37. Pretty much to the T, 1.37. Look at that psych level. Again, so many psych levels lining up with areas of interest. We also distributed. distribution schematic in here. Okay. Selling climax, secondary test, fake BOS, rally, spring, break, counter trend structure, and fell to the downside. Okay. We did call out 2 levels here. Aiden called out this one from 1.368, I believe. We had our last buy to sell, breaking counter trend. It was kind of interesting because really this was a liquidity run. This candle did not close below it. However, the level was met, right? We just had to assume that we were going short, not only because of the mitigation that occurred from supply, the equal highs that were run, the supply that was met here, and the supply that was met here. We saw the reaction, right? But we just had to assume, even though we didn't break counter trend structure yet, we made the decision to sell it and send this out because even though it wasn't 100% confirmed, it was still highly probable because of all the other confluences over to the left, because we reacted from our zone and fell strongly. Pulled back into it, fell nicely again, lower time frame, 15-minute, low, failure to make that higher high again, coming into supply, made the lower low. So now just a simple retracement back up into supply again, had more lower time frame distribution, imbalance. Our last buy to sell that came into this 15-minute level of supply again, tapped into it. That was my level. And again, more distribution here, 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 and here. What we could have easily done again for the 3rd time, and I didn't see this, but I got the entry and we ended up falling high, low, failure to make that higher high, lower low, closing below it. So this is our supply here. Flips from demand to supply, lower time frame. That's where you could have easily sold it right upon the imbalance fill there. So that's another thing that I actually just saw, another area of interest. But nonetheless, we're rolling back to the downside. So let's get into what we're seeing this week. So we have, in my opinion, 2 levels. One at 1.35832 and one at 1.3536. So even if, and now this is something that you may say, well, if we come and take the liquidity, shouldn't we be not looking for sells anymore? Well, yes and no. Normally I wouldn't look for sells sells upon, a closure below this level upon a pullback, because the higher time frame liquidity was met, but the higher time frame objective has not been met yet. If we come into 1.32 prior to pulling back, then yeah, every single sell is off the table. But until that occurs, I'm still looking for shorts. So 15-minute time frame, we can see that on Friday, we created equal highs. We created equal highs on Friday. We had this area of supply here, our last buy before a sell-off that actually swept liquidity coming deeper into here. So swept liquidity, created a supply, created imbalance as well. We can see the slowdown in price distribution, the demand in here that we reacted from that failed to make that higher high, and we rallied to the downside. So this turns supply now. Between this wick and this wick is imbalance. So straight selling offered in here, no buying was. So I want to rebalance price. So I was hoping that we would get back up into this level on Friday. We created equal lows, and we just kind of just pushed to the downside. Never took the liquidity, never mitigated the level. So I'm hoping that at some point this week, if we don't come into our objective first and we pull back first, which would be, I would like to see that, I would be looking to sell from here, 1.3535, 1.3536, whatever. And then higher time frame, really our distribution schematic, and then we followed with an engulfing to the downside, never really pulled back. If we have an overall retracement, I would like to be selling in this region of price here. So 1.35832, 1.36 would be nice as well to be looking for overall shorts. So mark off those 2 levels, and I'll be looking for short opportunities. We can see the 4-hour 50 is on our side yet again. All right, guys. So I'm going to take a little bit of a break. We'll come back in the second half in a couple of minutes. If you guys really enjoy this, if this resonates with you and you find this quite easy, you're going, as I go over this, you're like, wow, this is really cool. That's what we like. That is something that maybe you should pursue, smart money trading. It's really a proven strategy based upon exactly not only how the markets move, but why. So if you're interested and want to learn more about this, feel free to go over to our website, book a free call with us. We'd love to speak with you about your goals, how we can best present the most actionable plan for you to take based upon your goals and your current level of experience and how your personal life revolves around trading. We create a customized plan for you. And obviously we have that 30% promo going on right now. It's something that you should definitely consider if you are interested in the way we trade. It's going on right now, 30% is for another day or two. So www.arielfxtrading.com, book a free call. We'd love to speak with you, and we give you 30% off there. And even if you hop on a call with us and it's not for you, we give you our proprietary trading plan for free. But we want to make sure that you are the right fit for us, because we want to be looking to work with specific traders. And our program is designed to take you from really any level of experience to a funded trader in a 6-month period. That is the goal of our program. So if you're interested in that, please go and schedule a call, or take advantage of that promo offer that's going on for a couple of days, and that's it. So I'm going to take some questions. I'm going to stop sharing my screen. You guys have any questions for me? Gosh, there's so many messages. I'm going to add Aiden back to the stream if he's still on board with us. Let's see, US 30. Yeah, I'll be going over US 30 today, actually. US 30 looks interesting to me. I really don't trade indices at all, but I am going to do US 30 today because I know a lot of people do like to trade it. I'll put in my...
I can't type in the comments, so for some reason, I don't know what's going on with it, but someone asked for the website, looks like.
Sure, guys. Awesome. All right, I'll stay on for a couple minutes. Wow, it's almost 3:30. I'm going to take some questions for about 2 or 3 minutes, and then we'll break for about 5 minutes. I'll come back on and finish the rest of the pairs, and then we'll be doing our giveaway at the end. Stay tuned for a giveaway. I'm going to be giving out some cash here for you guys if you answered a simple question, but I want to make sure that you guys are paying attention, because it's going to be based off of something I talked about in this live session. You said, question, is it possible to take a trade while we're tracing to the higher high liquidity zone? Are you referring to a specific pair that I went over? It is definitely, I would say, just based upon knowing that, just based upon that question, is it possible to take a trade while we're tracing into the higher high liquidity zone? It is if you have room to go to the upside. So if you have liquidity to the upside, or a zone of interest to the upside, buy side, and you have all the confluences for a setup for a buy, then definitely, because you have room to go. However, if you come into a level like a higher time frame liquidity zone or area of interest, and then you start to fall from that level, and you're marking off charts and you see a great setup for a long, why would you not take that trade? You wouldn't take it because the higher time frame objective has already been met. So that is where a lot of people go wrong, because they don't know how to do proper top-down analysis. And that's where my expertise is market structure. I love market structure. So understanding the difference between maybe a break of structure and an overall retracement, or a continuation, knowing when to not buy and not sell, even if you have a setup in place, there's specific things to look out for. If everyone uses smart money concepts, won't they become the new retail concepts? No, because how any market is moved, any asset class, anything that is traded, we are not the people who move the market. Who are the individuals, or I'm trying to figure out the right question. Who moves the market? It's not us. It's the institutions and banks. So they already have their desired price targets. If everyone is trading, let's say everyone is trading smart money concepts. That's a really good question. Let me share my screen again really fast, and then we'll hop off for a few minutes. If everyone's trading smart money concepts, let's just say equal lows, sell. If it's selling to buy, this doesn't mean that it's going to become the new retail and they may sweep that low again. If price sweeps liquidity and then reacts strongly from that, that means that the banks and institutions, one, hit their overall price target, two, understand where the liquidity is to begin with, so they know exactly how much liquidity is resting above or below each and every level, especially, like this one right here. They know exactly how much it is, how much it's going to cost to come and take that liquidity, right? Because they have to move price short in order to take it, free up liquidity to place their orders. And when they move against it and move in the right direction, they're not coming back. They've already made the move. It's not to say that, oh, well, now there's more liquidity resting below here. We are such a minority in the overall scope of things that once you see this move, that's it. You're done. Like, that's it. You're pulling back. You're going long if you do pull back. It's kind of hard to explain. Aiden, do you have a better explanation for that? I think.
No, I mean, I think that makes sense. I mean, it's all driven based upon liquidity, right? The markets move on liquidity, not exactly how, smart money concepts traders are trading, right? Mm-hmm. So they're going to manipulate price where the liquidity is.
Yeah,
it's plain and simple.
Yeah, just wherever the liquidity rests, that's where they're going to take it. They're going to take that liquidity. It's going to move in the opposite direction after that, and we take that as, okay, well, smart money has entered into the market. Now we play off of that. So we're just patient and waiting for their clues.
And they have two objectives. One, take liquidity. Once that objective is met, rebalance. That's it.
Mm-hmm. Yep. When you mentioned that higher time frame objective being met, you're talking about price movement back to demand or supply. Yeah, so higher time frame objectives are areas of demand and supply surrounding daily, weekly, monthly zones that price is pushing up or down into based upon 1 hour, 4 hour trends. If that makes sense. And I think I have some more examples I'm going to be going over second half of the video, and I'll show you what I mean by that. Yes, I mean, smart money, it's the only logical way of trading, because that's exactly how, I mean, banks don't trade smart money. They're taking liquidity. They're
doing what's necessary to take the liquidity.
Yeah.
Wherever the liquidity is, right?
Yeah. So they're not trading smart money. We are trading smart money. We're waiting for smart money meaning institutions. We're waiting for the institutions to get in or get out of trades, and then look for their clues they leave behind for us to then take advantage of. Is the July challenge still valid? I mean, yeah, we still have that promo going on until midnight of the 4th. So 11:59 p.m. Eastern time on the 4th is when it ends. 30% off. I don't think we're going to go any higher than that ever again. I think 30% is pretty good. But that gives you access to literally everything that you need. A holistic understanding, getting a foundation in education first, right? Then getting on a one-on-one session with you, making sure we understand where you are in your understanding, and then helping you guys and moving you guys into areas in which you're struggling with to help you. And then we transition you over to our VIP community, where that provides that reinforcement every single day and that one-on-one mentorship. So that's our only package that we do, and we're offering 30% on that. But in order for us to gauge more about your goals and stuff, that's why we like to schedule one-on-one calls with you, just so we can create some sort of actionable, personalized plan for you with the overall objective to get you funded. What did you focus on to improve your psychology in terms of being patient? Training plan. Training plan, a rules-based plan is so important. And if you book a call, this will give you our personalized proprietary trading plan. That's so important. You need to follow your rules and follow some sort of plan. Understanding risk management, understanding when it's time to throw in the towel and move on for the rest of your day, not over trading. It just takes practice. Psychology is something that can't be taught overnight. We can give you information and advice on how we overcame it, but it's ultimately up to you to practice it. And that's why so many people quit within their first couple months of trading, because they don't have the right, one, they don't have the right risk management, two, they don't have the right psychology. So crucial. All right, guys, I'm going to take a little bit of a break. I'm going to come back at, let's call it 3:40. I'm going to give it 9 minutes, 3:40 Eastern Standard Time. So in 9 minutes, we'll hop on, we'll do the rest of our pairs. We'll take some more questions, and I'm going to do that giveaway. So stay tuned for that giveaway. It's going to be really cool. So yeah, we'll be back in 9 minutes. Hope to see you soon. All right, we're going to get going here in about 20 seconds. Just want to make sure everyone has a chance to get back on. Do you support and resistance levels or supply and demand? Support and resistance is liquidity. I aim to look at areas of liquidity. I also look at supply and demand levels for potential areas of interest. All right, it is 3:40 p.m. Eastern. Let's get right back into it. I have 10 more pairs to go over. I don't expect it's going to take nearly as long as the first 10, just because the first 10 had a lot more in-depth material to cover. Let's see. We're going to start off, just making sure I have my list. CAD JPY first. And I think people had questions about CAD Chef, wanting me to do that. That is up next after CAD J. So let's get right back into it and continue here. Kudos to you guys who have stayed on. I know a lot of people dropped off. That's okay. It's their loss. They're probably looking for handouts, and that's not how you get rich. Sorry. Anyways, continuing here. CAD JPY. All right. Everyone good? Can you hear me? Can you see this? All right, good deal. All right, CAD JPY is quite interesting. So obviously, I talked about how we're looking to short Eurocad, GCAD, UCAD. So that would naturally, we would naturally expect Canadian dollar strengthen, hence CAD-J, CAD-Chef to go long. And I do think that that will be the case. I do think that we can see further CAD strength. And obviously, we are in a bullish market on CAD-JPY. So overall, I do want to be buying Canadian dollar, Japanese yen. However, just like GJ, remember, I wanted to get back down into our area of demand. So that has not occurred yet. We have not pushed down that far into demand. We have rallied back to the upside, and we haven't made the higher high yet. So technically we could, fail to make the higher high, overall lower low to take the liquidity, but ultimately rally ourselves back to the upside to take to make a higher high, but really come back down and tap into this demand. So we'll have to see. It's kind of all up in the air right now. I really would like price to come lower in the sense that, at least back down to 104. I think 104 is going to be potentially the catalyst for a move back to the upside. We can see these are relatively equal lows. However, the structure is still bullish here. We have broken above counter trend structure. We have tapped into this demand, right? And then we have more demand here. So higher high, higher low, higher high, potentially higher low. So one more drive to the downside here. We'll be looking for buys to make it overall higher high in the market to clear this high there, right? If we do break and close below this level, I will be looking for not necessarily shorts, but looking for price to get back down into our level of demand around that 101 level, maybe potentially 100 deeper into the demand for more discount, right? So scaling in 1 hour time frame, counter trend structure, higher high, higher low, higher high, higher low, failed to make that higher high and broke counter trend structure. So currently counter trend, we're bearish. So two potential levels here. If we come into our original level at 104 first, I'm probably going to say where these sells are off the table. I don't think I'll be looking to short them, right? Because then this is really, I wouldn't say our higher time frame objective. Obviously, this is. But this is an area where I would be potentially looking for longs from 104 to maintain the overall structure. However, we could easily take this low and come deeper into imbalance here, right? For an overall retracement deeper into this demand for then continuations longs. This is why it's just a little confusing right now. I'm not going to be too eager to trade this. There's just too much going on, too many different levels and potentials here for price to push, long or short into any of these levels. So I'm probably going to take a back seat on this pair and just wait for more price action before trading, because I don't really see anything that's absolutely clear. The direction here isn't that obvious, but overall higher time frame, we are bullish. So let's just keep that in mind. So if somehow, we maybe rally up into here to start, maybe sell off, or even come up into here and sell off, potential areas of short, maybe some sort of sell to buy, That would be nice. Sweeping liquidity, coming deeper into the demand imbalance here, breaking counter trend, pulling back. That would be an overall setup that I would look for. That would be a highly probable setup that could happen throughout the week. Obviously, we don't know what's going to happen. We'll have to wait and see. But right now, not very clear. CAD Chef. Now, CAD Chef is quite similar to CAD J. Obviously, we still are in a bullish market. Daily time frame. We swept the low February of March of 2020. So obviously COVID. Then we rallied to the upside, breaking that structure. We have equal highs. So this will be the draw on liquidity. 0.7950, really 0.8 psychological level. And I really want to get back up into our prior, supply. Gosh, I keep getting that mixed up. Supply and the imbalance around that 8.2 level. So really buys up into these higher time frame zones of interest. So first and foremost, that higher time frame liquidity, equal highs, and then 8.2 would be the overall objective. So we're still in a bullish trend, higher high, higher low, overall pullback. Higher high, looking for the overall pullback. Where is the LPOR? LPOR stands for last point of return. That's right here. This is this last selling volume, because remember, we failed to make that lower low. What were we doing? Lower low, lower high, lower low, lower high. Should have made a lower low to continue with the overall pullback. We didn't. We failed. We made the higher high. So this is our last point of return. So we want to be looking to trade when price gets back down into here. That's exactly what we're looking for. It's a lot of liquidity being built up now. We can see the trend line liquidity. Not really one touch. One touch here, two touch here, three touch here. Triple equal lows. So a lot of people are looking to sell below the quote unquote support. We want to be buying below support. We want to be buying at discounts. Where is that? Well, daily time frame, we can see this level of demand here. So we failed to make the lower low. We broke the counter trend structure. We repriced ourselves and we continued. Again, we pulled back but never reached the demand. How many times do we see that? We always pull back, not fulfill a level, and then we continue and expand. And then we overall have the retracement deeper down into here to sweep liquidity. Happens all the time. So that would be one level of interest for me. So at least 7,350. And then deeper into our imbalance here. Really our last point of return. We have imbalance in this level between this wick and this wick, really daily time frame, we can see that better. Yeah, this wick and this wick here. And if we go to the 4 hour, this is really our last point of return in regards to, in terms of accumulation, right? Accumulation in here, equal lows. We had our spring. We failed to make that lower low, which was expected based upon accumulation. And then we rallied to the upside. So right in here and right in here, it will definitely be levels in which I'm going to be looking for buys. So that would line up with, again, Canadian dollar strength. Canadian dollar, Japanese yen pushed to the upside. Obviously, CAD Chef pushed to the upside, but XXX CAD pushed to the downside. And that's what we're expecting. We can correlate these pairs as we're going through these setups. So we have the equal lows. What I'm looking for is just for price to get back down in here. I don't really see anything that tells me, okay, we're going to be looking for sells unless we do something like this. I don't know. We create some sort of liquidity right there. Maybe we push up, create equal highs, push back down, push back up, buy to sell. And we don't come into these levels yet, but we break the counter trend. Then we can pull back and maybe sell into these two levels. That way we'll have a selling opportunity and then obviously our buying opportunities from those two levels. So that would be really the only way I would look to sell it, is if I would have confluence in that regard. So let's look at 7,350 and let's look at, let's say 727, 726. And obviously you can put your stop wherever you need to. And then also the drawn liquidity here, relatively equal highs. That's where we're going to be looking to target. And we can see in here, prior to the two levels and the equal lows, we're potentially starting to accumulate. So if we go something like this, something like that, equal lows, accumulation, spring, break of counter trend structure, that would be really nice to see. So let's keep an eye out for those two levels on CAD Chef and look for buys this week. All right, we're going to go over Euro AUD and Euro NZD. Euro AUD is looking really good for longs. I really do like longs on Euro AUD. Daily time frame, we haven't come into our overall objective at 1.56. This is really our last buy to sell. We can see we have tons of imbalance, just straight selling in here, just low resistance liquidity. we're in this pullback phase. We've broken the counter trend. We made the higher high. We failed to make the lower low. And now we're just continuing to make higher highs, higher lows, lower time frame, well, daily time frame, but still retracement, right? So really we're looking at 1.56 as overall targets. Until we hit that, we're still bullish. 4-hour time frame. It's a little tricky. And it sucks to say, but we may come lower than this level. Beware, we may come lower than this level here, have a deeper retracement. I wouldn't expect that just because we did create liquidity, equal lows, sell to buy, break above the counter trend structure, pull back. We have the 4-hour 50 in here. We have imbalance, 1.52 psychological level. We have a lot of confluence for this. However, even though I will be looking for buys in this area, definitely I will be. Could we potentially snag this low? This is Friday's low. So yeah, we could potentially do that. Overall, the objective is 1.56. That's what we're going to be looking for. So whether that be we pull back now and go long, whether that be we may run Friday's low and then look for continuation to the upside, something like that. Overall, we're bullish. I don't want to be selling below this level. So even if we come down, maybe sweep this low here, right? We may, come deeper into a demand, maybe there, right? That would be an area of interest for me if we do take this low here. Right. But first and foremost, we need to be looking at buys from 1.5214, right? In and around that zone, looking for buys into 1.56 would give us a nice risk to reward as well. If we come a little bit lower, take Friday's low, maybe create the low of the week right here. I don't know, somewhere around that level. I will be looking for longs again because we're still bullish and our higher time frame objective has not been met yet. I don't want to trade below this level. If we trade any below this level, that's okay. I still will be looking for buys. However, really, this is our range. This is the low that made this high. I really don't want to see any bearish momentum. If we do end up pulling all the way back and coming into our original levels at 1.4750 and 1.47, then yeah, definitely I will still be looking for buys, but I don't want to see that. I want to see short-term continuations into the overall objective. But so mark off these two levels, mark off 1.5215, maybe 1.5, and then 1.4750, 1.47. We're going to be looking for longs from those 4 levels. So I'm not looking to sell this. Euro NZD, quite the same. Again, a higher time frame. What did we do here? Well, we snagged liquidity. This is just a liquidity run. We had the lower low. So naturally, we should expect a lower high. But this is a key area of supply. High, low, high, low, high, low, high, low. Failed to make that higher high. React off demand. Failed lower low. Turned into supply. 1.7, 1.71. I've been saying this for months now. I've been saying it since we were down in here. So back in April. So we are coming into 1.7 as expected. But where can we react from? Well, I originally thought that this would be a very good level to react from because one, this is our area of interest. We accumulated in price coming into a lower time frame area of demand. We reacted from, made a higher high and pulled back into this area of demand here, retesting the accumulation. Okay, we snagged this low here on Friday, snagged the low and engulfed. Very strong reaction, even sweeping these equal lows in here. What else is this? Head and shoulders. Fake out moon. If you traded short here, you need to reconsider your trading. Seriously, don't go retail. It's ridiculous. Higher high, pull back into an area of demand. We had a reaction, but we didn't see any follow through from it. I am in this trade. I did put my stop here. I have another trade here, 2.25%. So total of 0.5% risk. One stop loss here, one stop loss here. Probably going to snag the stop loss. It's okay. Oh well. We know we're going to come into 1.7. So what I would like to see is I would still like to see this level stay intact. I want to see this trading range remain. So we may run this low. We may come deeper, maybe build some liquidity, maybe sell to buy. That would be really nice, right? That would be nice. And fill up some of this imbalance, come lower into this level. I don't want to see a break below this level. If we break below this level, if we close below this zone, if we close below it, keyword, not if we wick below. If we wick below it and come into this, then we still could be in for longs. But if we close below it, I will be looking not necessarily for shorts, but for price to have an overall retracement into our higher time frame area of demand that we've been originally looking for here at 1.6. And I've made a video on Euro NZD. If you've seen it, you already know why I'm looking at this level. There's so much confluence that's going on in here. I talked about this for about a month straight. So hella equal lows, guys. Equal lows here, equal lows here. So could be in for an overall retracement, even though I don't want that to happen because our objective is right there. We need to go and take it. I think that's what's going to happen. We're so close. I think we may run it and then start to fall. So that's why I really want to stay within this trading range here. So looking for longs. That would be the overall goal for this week. Continued longs for Euro AUD and Euro NZD. Next, Euro GBP. There's not much to talk about in Euro GBP besides the level that we called out on. Actually, I think we called it out a week ago. I think Aiden called this out a week ago. It was a 3-hour time frame. We said that even though we are quite bullish, but we have a lot of equal lows, and we have a beautiful sponsor candle. This candle, this buy to sell, engulfing, and we just absolutely died from here, swept this liquidity. So this is a sponsor candle. It's also in balance. So we thought, okay, we may come into this level and react, and we did to the exact T. I think it got into 5 pipettes of drawdown. Still really good. So we're in shorts here. I am looking for overall continuations long, but I'm looking to snag the liquidity. There's really nothing to talk about. I don't really see much in regards to a setup. I mean, could you consider this an area of interest to be shorting, pull back into, imbalance? Maybe. I would probably stay away from this for now. Obviously, VIP will keep you updated with any possibility with Euro GBP, but we did call this out and we are in sells. So no setup currently at the moment on EG. Euro JPY. Euro JPY is very similar to GJ. We have the higher time frame zone that we haven't come into. Remember, daily time frame, and we had the liquidity run on GJ. We had the sell to buy. We had the demand, and we pushed back into the demand, but just failed to hit it by a couple pips. Right, same sort of deal here. We have the retail head and shoulders, skewed head and shoulders here. Sold, people sold upon the break of the neckline, upon the closure. Well, we're in bullish territory. We retested prior market structure, and we knew we were going long because 1, we're bullish, and 2, it's retail head and shoulders. Come on, we don't do that. Pushed back to the upside, made a higher high. Okay, this is an area of discount, area of demand in which we're looking for price to come back down into. This is just low resistance. So I really want price to dig deeper into here, and I think that it might. However, lower time frame suggests otherwise. If we close below the low here, I have an entry from this level. I mean, a little bit of profit, but if we just continue short and we close below this blue box, I will expect price to come lower, but I'll still be looking for buys around 136.8, which is our demand zone. Because, well, 1, we're bullish. 2, we haven't hit the demand zone yet. And 3, we have a lot of equal highs, triple equal highs, huge draw on liquidity. But for the here and now, we snag liquidity here. Okay, a lot of liquidity, sell to buy. 2 potential levels. 1, just right off of the last selling volume after the higher high was formed, break of counter trend structure right there. And then equal lows. Obviously, we love to build up liquidity prior to coming into levels. And then we push down into it, came a little bit lower than the initial area of interest, but we came lower into a tiny little area of demand. And that's where I bought it. I bought it at 139.95. So pushing up a little bit of profit. We'll see what we can do this week. There probably will be an opportunity on EJ this week, whether that be, some sort of break of counter trend structure and we look to buy it, or we end up falling and we come back down into here and we can look to buy it. But nonetheless, EJ is in crucial territory either way for some sort of buy position. So we'll be looking to buy EJ this week. But I wanted to make you aware of the fact that we have equal highs. The bias is long, but we have 2 potential areas. 1 here, which we already met. So we're just going to look for confirmation. Maybe 1 more run on the low. Who knows? Break of counter trend. We're just going to be looking for areas to buy during the right time of day, right? Obviously, to snag the liquidity, come higher into 150 would be my overall target, or we come lower into our demand and we'll be looking to buy from there, right? Higher high, higher low, higher high, higher low, higher high. Okay. So 150 will be my target on this. Let me just go back to the higher time frame, make sure that's correct. I believe it was 150. Yeah, that's correct, because we have higher time frame liquidity here. I would like to take this high, right? I really do think we can. I think that's what we're going to be targeting next. If we don't, then we'll come into here. I think that, well, probably right there. That would be nice. That's supply, right? Because we failed to make higher high and we just absolutely melted from that level. So we'll just extend it all the way over. And that's probably where we'll come into. So at least 145, 146, anywhere between 145 and 150 is where I'll be looking to take price into, right? That will be good. So continued longs, what we're expecting. We're above all EMAs and we're coming into the daily 50 now. So that's good. That's Euro JPY. Nzd Jpy. Still quite similar. We haven't come into our higher time frame level yet. We made a higher high, a higher low. We snagged some liquidity, made a higher high, snagged this liquidity here, this liquidity here. We came lower into a lower time frame area of demand. Not quite sure what time frame it was on, but I know it was very pretty. I think it was 4 hour. Yeah. You can see right in here with this wick. Look at this candle. This is our last buying volume, okay, before we had our last selling volume. So this is the last buying volume before the sell-off, and then we expanded. So this is the demand. So if we go over, we made the higher high overall. This would be where our eyes should go, here or here. Obviously, we never had a reaction from this area of demand here. We broke through it, so now our eyes go here, still maintaining our structure. We created more liquidity, pushed up, fake BOS, came back down and tapped into that level beautifully, right? Around that 75 level, okay? We accumulated lower time frame. So that would have been a very nice entry, probably right here or right here upon the break in structure, right? Pull back into demand. But we ended up rallying. So that's very good. That's what we wanted to see. So let's go back to the daily. I wanted to pull back into that level. We never did. So same goes for what? UJ, GJ, EJ, CADJ. The higher time frame objective hasn't been met in here. So we could, if we do sell off, and even if we close below this level, I'm not going to be looking for sells. I'm going to be treating this as liquidity if we come in and take this out, and then looking for as longs, a long opportunity from this level. Okay, so if we come lower from 79.2 to obviously 75.26, I'll be looking for longs into our higher time frame objective here. And this is so cool, guys. Let's look at that weekly time frame. You can see here we filled the imbalance to the T, 93.365. Here's the imbalance. We filled it pretty much to the T. We failed to make the higher high here. This demand turns supply. And this is our lower time frame supply in here when the lower time frame broke structure, because we can see we failed to make the higher high, but then we also lower time frame distributed high here, broke counter trend structure, pulled back, short off supply. So that's our level. So that would be the higher time frame objective. And we can see we haven't come into it yet. We're almost there, but we haven't achieved it yet. And then 88 would be that target, psychological level 88. So we haven't reached it yet. So we're still looking for longs. We're above all EMAs. So if we fall, definitely 79.25 would be appropriate. We also have 2 levels in which I would be looking to play off. If we pull back right now, I'll be looking to sell from this level here. If we pull back right now, if we don't come any lower than this, if we come lower than this low here, the sells are off the table. But if we maintain these lows for the time being and push back up, then I want to potentially be selling here around 85.3, because we made a low, we broke counter trend structure, lower low, lower high, lower low, lower high, lower low. This could be acting as a lower high to sweep all this descending liquidity coming up into our overall area of supply. We can see the descending liquidity, buy to sell, reprice, continue acting as supply. We have imbalance from this wick to this wick. Selling volume was the only volume that was offered. Only sells were offered here. We had no buying offered. So 85.3 would be that mean threshold for that imbalance. We pushed up into, I think it was a 15-minute, if I'm not mistaken. Yeah, it was 15-minute level. This is not a sponsor candle. Why is this not a sponsor candle? Answer that yourself in the back of your head. Why is it not a sponsor candle? Because it did not take liquidity. It's just the last buy to sell. It doesn't mean it's valid. I didn't sell it from here. But because we had a reaction from there and then the counter trend break upon liquidity that was run, this becomes valid. So this wasn't valid for me because it wasn't a sponsored candle. But because we reacted from it, now I just had to mark it off to make it look pretty, but took liquidity, buy to sell, supply, failure to make a higher high, flips to supply, we fell, make a lower low. That would be the area in which we pull back into, 85.3. So that's if we don't come any lower than this low here. If we do, I will be looking at buys and buys only. I won't be looking to sell anymore. Daily time frame, area of demand in here, right? It's kind of similar to all the other XXX JPY pairs. Okay, so that would be, let's call it 82.88. That's where I'll be looking to buy from. So potential shorts from here, 85.3, if we don't take the low first. If we do, looking to buy at 82.88. If we fall further, definitely looking to buy from 79.25. Targets 88. All right, mark that off, take a picture, whatever you have to do. Moving on to the next pair. I have just a few more. Take some questions. I'll do the giveaway. Then we'll be done. Nzd CAD. I don't have anything for Nzd CAD, actually. The reason why I wanted to go over this was because I think it's a good learning lesson for you. Talked about this in a supply and demand flip video. We understood that 0.8 was our higher time frame level. We'll just go to the weekly real quick to show you. This will be very brief. We haven't taken out this low yet. 0.801. So 0.8. We finally did this week or last week. But before this candle, so before last week, we didn't do that. So that was our objective. We were going to take that out. So we were continuing to look for shorts. Lower low, lower high, lower low, lower high. We came into a supply region. That's probably why we failed to make the higher high. But to confirm, you want to see reactions and then failure to make a higher high in this case, and then a lower low formation to pull back, right? So now this demand flips to supply because we failed to make the higher high. We made the lower low. So this supply candle, right? This exact 4-hour candle, you can even scale it down to a specific candle. That's how great smart money is. Demand flips to supply. This candle in here before the rally to the downside creates a supply. Again, time and time again, we create liquidity prior to coming up into a level. We run the liquidity, react from the level to the T essentially, and then we fell. I called this level out here, 818. You guys can go and fact check me on that. I know I did. I called that out many times. Why? Well, because we knew we were shorting off. We weren't going to come above this high here because this was the objective that we came into, right? So what would be the point of rallying higher than this? There wouldn't be any. And also such a sensitive level. Support, resistance, support, support, resistance, support. It's very sensitive. So I'm not treating it as, oh, it's support, now resistance, now support, and now resistance again. Oh, we have to sell upon resistance. It's not what it is. It's just a sensitive level having the other confluences here that I just spoke of already in place, knowing that we have to come down to 0.8, which we did last week. Why else? Higher high, higher low, higher high, higher low. Demand failed. We failed to make that higher high as a result of, this reaction, and then we fell, made that lower low. So this flips to supply. And I think that's where we came into. I think we just came just shy of it. Yeah, just a couple pips shy. But again, 818 was the psych level here for me, round figures. That's where I wanted to place it. And it was just in the mean threshold of this overall range, right? So that's where we shorted from. VIP caught that very nice, swiftly into our overall objective. Nzd CAD. I don't see anything this week so far because we've already reached the objective. So selling, if you want to sell, I guess you could be looking at this level, pullbacks for continuations. But again, we already reached the objective. Could we go long? Yeah, we could. But again, thinking back to correlation, CAD is strong right now. So maybe we can be looking for further shorts. We're still in a bearish market. Just because we hit an overall objective doesn't mean that the trend's over and now we're going to go long. Possibility for sure, definitely, because we did reach the overall objective. But CAD is still strong. you could look to short it. That could be a level right in here, around 81. So 0.81 cycle level, 0.811 maybe, something like that. Anyways, that's NZD CAD. Two more, AUD NZD, and then I'll go into US 30. AUD NZD, it's kind of hurt me a little bit. I'm in drawdown on this trade, I'm not gonna lie. Daily time frame, where is the objective? Where is the liquidity? This high here, 11750. We came up into it, just missed it. So equal highs have been formed. That will be the objective. We're still above all EMAs. We go down to the 4 hour, we can clearly see the structure. Higher high, higher low, higher high, higher low, higher high, higher low. Equal lows, or well, 4 hour time frame. You can see the 1, 2, 3, 4 touches. Many people were buying, shorted off into that LPOR, last point of return market structure, demand, right? And then we rallied, breaking the counter trend, and we accumulated lower time frame below the liquidity. So not only did we take retail trader stop losses, but we mitigated the level, maintained our structure, broke counter trend, and now we're looking to long, right? So I thought that this zone would be very key to be looking for longs. And, we didn't even have a reaction. We just engulfed. So I do believe that my stop will be hit, and I'm going to let it be hit because you have to do that. If you enter into a trade, you enter into it for a reason. Either it hits your take profit or it hits your stop loss. Don't move your stop loss. Don't close a trade prematurely. That's just bad trade management. Let it hit it because you entered it in the first place. You had reason. So it'll probably come down and hit it. I will still be looking for longs because our higher time frame objective hasn't been met yet. And I will be looking at taking a long from potentially 1.09166. This is our demand zone that we actually really haven't come into yet. We can see that we didn't tap into it. So really anywhere in here is where I'll be looking to buy if we come any lower than this level. All right, but again, this isn't really that pretty. Not too pertinent, but anywhere in here I will look to buy it up into 1.1175 and 1.2 will be the cycle level. All right, so that's AUD NZD, and then our last pair of the day, ladies and gentlemen, will be US 30. US 30, I had made a video about this a little while ago, and we did have a distribution, big time distribution schematic. Okay, we're falling to the downside. We've been falling for a while now. Originally, I wanted 344 to be met. Why 344? Well, one, we had equal highs, so draw on liquidity, and obviously more draw on liquidity here. But, we never pushed up into it. We just continued to make lower lows, lower highs. But I wanted to push up into it, one, because it was in balance. Two, it was the last buy before the sell, so the sponsored move that swept the descent in liquidity. Notice how the open right here, this is the last selling candle before the buyout. So this is the candle that started the rally to take the liquidity. So this is the open of the price. So let's say 344, let's call it round figure. That lines up with our imbalance here. Okay. Why did we stop there? Well, we stopped because of supply that came into other supply here. That was a result of the spring that we saw, the closure below the counter trend structure upon the distribution. So that would be a very valid region to look for price to come into for shorts. Where is the overall target here? I'm going to tell you it's going to be 29,600. Why is that? What's the significance of 29,600? What's the significance? Not only is it market structure, it's the high that was made prior to the Black Swan event of 2020. This is COVID. We're going to tap down into 29.6. We're going to come lower. Now, which level are we going to come into? I have two levels. One, my original level at 3,440, right? That original imbalance level. That's also a institutionally sponsored move. So sponsor candle. That level here and the imbalance here. So even if we just continue lower time frame, we may just react off of this supply. We swept liquidity. So lower low, lower high, lower low, lower high, liquidity run, lower low, could see a lower high into that supply, 32512, and then a lower low into 29.6. So that will be the overall objective. So what happens if we come into it now and then retrace? I probably wouldn't look to trade it. I don't like trading indices anyways, But if the overall objective is met first, probably just going to let it go. Not going to look to trade it. But if it doesn't, if it retraces first, then yeah, sure. It will definitely look to sell it here. And if it comes any higher, then this is still on the table to take out this liquidity. Obviously, stops would be above that high if we sell it here. Stops would be above this high if we sell it here. All right, so that's US 30. Overall objective, 29.6. We will be coming lower on US 30. Okay, that was a lot. Hopefully you guys learned something. I stopped sharing screen. Let's see. Haven't been able to look at the chat lately. Let's see if we have anything. Guys, if you have any questions, I'm going to open the floor up. I'll stay on for another 5-10 minutes. Then I'm going to go enjoy the rest of my Sunday. And then I'll be doing, let's see, the giveaway. That's right. Let's go questions first. I'll do the giveaway at the end. I want to answer some questions. Anything else? Any other pairs that I didn't discuss? I'm not going to go over. One, I've done too much today. Two, I've done a full review of all the pairs, and the pairs that I don't go over or didn't go over didn't have anything to talk about. Let's see. Yeah,
and there will be a recap later this evening on Trading Nuts channel, so you'll be able to see a replay in case you hopped in late or missed anything. So be on the lookout for that in a short period of time.
Yep. We will be releasing Smart Money Sundays on the Trading Nut platform. But yeah, hopefully you enjoyed that. I know it was long, but it's good value for you all. Hopefully you were able to take some good notes, jot down these areas of interest. Any questions? Let's see. I don't really see too much, guys. Again, guys, if you're interested in learning how we do this and want to keep up with this sort of analysis on a day-to-day basis and learn how to do this yourself without being dependent on anyone, we have our program in place that's designed really to get you funded and become a professional trader. It's not going to take a day. It's not going to take a week. It's going to take some time. If you are a person who is focused and dedicated, our program is for you. We don't do handouts. We don't do signals anymore. We don't do that. We do value. So I just remind you guys, Ariel Fx is not for those who are struggling financially. It's not. We have to be able to invest in our education. Nothing is free in this world, unfortunately, but we try to price our products very competitively. We have our whole bundle for only $750, but we're having 30% off right now. So if you are interested, take advantage of that. Schedule a call on our website if you want to learn more, if you want more detail. But it's not also, we're not here to work with people who complain or make excuses, who are lazy, who have the get-rich-quick mindset. 95 to 99% of people in this industry fail. Why is that? It's because they are lazy. They have the get-rich-quick mindset. They make excuses. You can't have that if you want to be a professional. You have to understand your why. Why are you trading? What's the goal? Is it just to make $5 or $10 and that's it? Well, what's the goal? Is it because you want to do this full time? Is it because you want to help your family? Is it because you want to retire? Well, in order to do that, that requires a professional mindset. How do you have a professional mindset? How do you have a professional trading plan and way of going about trading every single day? You have to do things that professionals do. So you got to get into that mindset too. But if you are someone who is serious about making money online, who is hardworking, who is very coachable, eager to learn, and who has the means of investing in your education, this program is definitely for you. We would love to sit and work with you because we just couldn't deal with doing signals anymore. People were too dependent on us, and we didn't want that. We want self-sufficiency. We want self-sufficient traders who can do it without our help. Because if we died tomorrow, you wouldn't have us, right? So www.arielfxtrading.com. We'd love to speak with you about your goals, how we can develop a sophisticated plan for you specifically and help you get funded over time. All right. So I don't think I see any more questions. I'm glad you liked this webinar, guys. If you wanted us to do more of stuff like this, drop it in the chat.
Yeah, this is our first Sunday doing this. We typically do Smart Money Sundays on our YouTube channel, but we're going to start, if we don't do a webinar, at least giving you guys the kind of pre-market analysis every Sunday with a pre-recorded video if we don't do the webinar. So be on the lookout for Smart Money Sundays videos or these webinars on Sundays in the future. Provides a lot of value in preparation for the week ahead. So I hope you enjoy it.
Mm-hmm. Yeah, I'll put in our website one more time because I know people are asking. There's a training page. How do you determine which levels to place, limit, or wait for confirmation? I went over that during the whole entire webinar. If you want more explanation, I would recommend watching our YouTube videos or joining our program. We can work with you one-on-one to help you know exactly how to do that, because that's very important. Good question, though. All right, there we go. All right, time for our giveaway. Wow, only 60 people are left. Great. I can give it to someone who really cares. Awesome, guys. Thank you for sticking around. It's been about 2.5 hour webinar. Love it. Okay, so the question is $50 giveaway. This is a 2-part question. You have to get both questions right in order to win. First person that I see answer it correctly gets it. Unfortunately, if you guys answer second, third, fourth, whatever, it's only for the first person who answers it correctly. Here we go. $50 giveaway. Message us if you are the winner on either IG or Telegram or Discord. What price are we looking at EU to come into? What's the exact price we're looking at EU to come into? And what is the significance of that level? Why are we looking for price to come in? Why are we looking for a price to come into that specific level? So what's the price and why?
That was early on. Let's see who's been here though. Let's see who's been here the whole time.
Got to get them both right in order to win, not just one.
Uh-oh. It's quiet.
Come on, guys. You guys okay, 1.0340. All right, what's the reason? That's the correct one. All right, I'll take that. I'll take that. 1.0340 yearly low from 2017, aka liquidity. Adebayo, message us on IG, Telegram. It was a 2-part question, so I think one person got it right the first time, but didn't have the second part. So, yep, you are the winner. Message us on IG or Telegram at Ariel Fx Trading. Our IG is Ariel__FX. It's a double underscore. But yes, it is 1.0340. That is the area. That is the 2017 low. We have tons of liquidity resting below that, so we're looking for excuses to short into that level. Congratulations, guys. That's all I have for you guys today. Stay tuned for Smart Money Sundays. Aiden's going to be posting that soon. We'll get that over to Cam, and he'll be over to post that to the Trading Up YouTube channel. So, guys, if you have any other questions, I'll take one more minute, and then we'll head out. But again, guys, if you like the way we trade, we'd love to speak with you more about how we can get you to where we are. We want to teach you guys and help you get funded. That's the ultimate goal of our program. 30% off until tomorrow evening. Enjoy your Sunday.
Happy 4th of July to all our friends in the States.
Yep.
Enjoy the weekend. Enjoy the family time. Enjoy the good food. Tomorrow's a holiday, guys, so markets should be light. Kind of enjoy the day off. Get back to crushing it on Tuesday.
Yep, definitely very low volatility tomorrow. I personally won't be trading. I'm going to wait until Tuesday, New York session.
Beautiful.
All right, let's see if we have any other questions here. If recession is going to hit, what kind of movement expected in Forex? Well, we already are in a recession. No one knows it yet. It hasn't been officially talked about, confirmed. But if you understand macro and microeconomics and what's going on in the current state of the union and really what's going on in the world, we already are in a recession and it's not looking good. So
you see 2 quarters in a row of negative GDP. That's indicative typically, but we're not really seeing the economic pain. Yep. I think in order to wrestle inflation back down to 2% target, their monetary policy is just going to have to get tight, and that will in turn induce a real recession that will be manifest probably late 2023, in my opinion. Even though we technically are in one right now. I don't think people will start to see or feel the pain of it until late 2023, early 2024. It's just what's going to happen to get inflation down to 2%, because it's at something like 8% right now.
Yeah.
But
so, a piece of advice: invest, continue to invest, cryptos, stock market,
multiple streams of income, cash flow.
Yeah. Don't pull out your investments in cash. It's the dumbest thing you can do. Dollar cost average your way in. Buy now. If it keeps dropping, buy more. That's what we're doing. That's how we're in such a discount price right now. Such discount. That's how the rich get richer, is they wait for these crashes and they buy more. Everyone else during the crypto boom, I don't know how many people are coming to me, guys, you can buy this, buy that. I can help you, get rich. I just turn the other way. Because they're ignorant. And then guess what? They buy at such a high price, and now their portfolio's zeroed out probably. But yeah, sorry, I didn't see the question. In a recession, usually you'd see dollar strength.
Yeah,
usually. Nation currency up. Yeah, developing down. Right, correct. Is it possible to become consistent by watching your videos? Yes, but it takes practice. You can watch all our YouTube videos. You can get on these webinars. You can listen to our live sessions that we have every Wednesday morning. Definitely, it can definitely help you. But what we feel is the best possible way, that from our experience, is proper mentorship and a solid foundation in education. That's our whole mission, is to be the mentors we wish we had when we first started trading. So we have all these problems that we faced when we were young traders, and we are now creating solutions for those problems, so you don't have to go do that same thing. So I would say that a foundation in education coupled with mentorship is going to be your best bet, and that's what our program is designed to do. So I would say, the videos will help, but you need that reinforcement at the end of the day. That's just through my experience. I'm sure many people have different experiences, but all I can help with is through my own experience. All right, guys. Well, take care. Have a great rest of your day. Enjoy the day off tomorrow for those of you celebrating 4th of July. And we will speak to you all Tuesday morning. Those of you in VIP, I'll speak to you all on Tuesday morning. Those of you who aren't in our program, no worries. If you're interested, check out our website, book a call. But we will have another live session Wednesday morning on the Trading Nut platform, 8 a.m. Eastern Standard Time or 7 a.m. Eastern Standard Time. I'm not quite sure what Cam's doing. We'll have to see what the deal is with that. But, we'll speak to you soon. Take care, guys. Have a great rest of your day.
Thanks, everyone. Have a good week.